Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame scenario where we're looking for an impulse to the upside over here in 5 waves, where potentially wave 5 is already in as it hit the 1-to-1 over here, which is a minimum target for a wave 5, or we're looking for higher prices to a maximum price of 43.7k. It all really depends on what we are seeing more locally, and that is where these lines are coming in. If price is going to move straight towards the downside, the probabilities increase for 5 to already be in and this to be an impulse to the downside and then a wave 1, 2, continuation to the downside in a wave 3, or it is an A, B and then a wave C to the downside for then a bigger corrective structure and continuation to the upside. If price follows the yellow line, then we're looking for a bit of a bounce back towards the upside, maybe even taking this high before then a continuation to the downside to take the double bottom we have over here at 35.4k, or maybe even a little lower, and then we are looking for a bounce back towards the upside to grab this high and look for higher prices. In the most bullish scenario, we're looking for this to be another wave 1, 2, and then a continuation to the upside in a 3, 4, and then a wave 5, expecting price to end somewhere in the higher edges of this box to end then a wave 5, and then we're looking for a bigger correction to the downside. Now, as it stands, if we look at the resistance areas, the high so far has been made just below the golden target box over here, 38.5k to 39k, and that is important because I do like the target boxes to be hit for important pivot points, like points where price eventually returns to either the up or the downside. And the fact that price came so close but no cigar of not hitting this golden target box over here gives me probabilities, or higher probabilities, that a high is not yet in and we are still looking for a bit more upside yet to come. If we jump to this range over here, then I have 3 scenarios that I like to go through. First of all, a WXY complex sideways structure where we're looking for a flat in W, flat in X, possibly another flat in Y, or a zigzag or a triangle, but at the moment looks a little unlikely. Potentially the zigzag, that would be the second most likely at the moment. But for this wave Y, we are looking for one of these structures to form. And then we are looking for that yellow line back towards the upside. Again, if it is an impulse to the downside and then a 1, 2, looking for a bigger 3 down, probabilities increase, the high is in, and we can look for much lower prices to come. In a bullish scenario, we have a finished triangle. This is your wave 1. This is a retracement of your wave 2, and you're going to be looking for continuation to the upside. Most common target for wave 2 is the 05 to the 786 area, which is between 37k and 36.2k, after which you then want to see strength and price moving to the upside. And more local support, besides price just now grabbing this low, is also the blue box that we have down here, which is sitting between 36.4k and 36.6k. Just above price at the moment, we have some resistance, the blue box up here, 37.7k to 37.9k. And above this, we basically have a bunch of highs, and then we have that golden target box that is very interesting indeed. If we look at the most bearish scenario, then that triangle is the end of a wave 4. This is your 5-wave impulsive structure in a wave 5, hitting that 1-to-1 over here, right, which is a target for a wave 5. And then you're going to be looking for a move towards the downside, preferably impulsively, because if over here price starts to create complex or corrective structures, probabilities increase for price to still take the high. So you preferably want to see a 1, 2 and a big continuation to the downside, where you also want to see volume increasing as price moves down in then a wave 3. An ABC is also allowed, but then we have to think about a leading diagonal and then a 1, 2, 3, 4, and then a wave 5, something like this, right? And then that's the end of your wave 1, looking for retracement in 2 and then continuation to the downside. So that is still an option. However, probabilities are higher the moment you see an ABC zigzag to still take the high, because for a diagonal it's way too early to call. If we then finally zoom into the micro time frame, the price action has been incredibly complex. So first we had a potential ABC here, right? But after this move to the upside, it wasn't great to put any wave B over here, because this over here looks like a flat structure. And the problem with this wave C is that because of all the overlap that we have over here, you have to think about then a potential diagonal, but in a wave 2, and a wave 4 of a diagonal, you need to have zigzag structures. A flat is not allowed, which means you then have to put this wave B over here, and then an A, and then some sort of a WXY wave B, and then this is your C to the downside. Now this wave B is then incredibly long to this wave A, which lowers the probabilities of this scenario a bit. And if we're looking for a wave C to the downside, then you can see we have a 1, 2, 3, 4, 5 move up again, 6 like structures over here. So that doesn't really work. So we need to think in zigzags. An ending diagonal wave C always has to be zigzag structures, and then your wave 1, this has to be then a 2, 3, 4, 5. But also the problem here is that you then have a flat structure, which is not allowed in a diagonal. So I'm not a big fan of this scenario. We just took the low over here. We are still above this blue box, but personally, I am keeping an eye on this blue box over here, because the reaction at this box for me is very, very, very important for price to move to the upside, still having the possibility of taking this high in the relatively short term. But if we lose this box and move impulsively to the downside, probabilities increase that this is definitely a high for an upcoming period of time, and we're going to be looking for much lower prices to come. In the more bearish scenario, that is then also where we want to see lower prices, as we are looking for an impulsive structure to the downside. In a 1 sideways long 2, gotta have to be said that the high over here reached the 0.5 taken from the high to the low, which is a common target for a wave 2. So potentially a finished WXY complex structure, then another wave 1, flat in another wave 2, and now you're working on a bigger wave 3 to the downside for lower prices to come, where of course we want to see the impulsivity increase and volume increase as well. Also important is that price now move below the point of control of this range. We had a little bit of support over here, but bearish CVD divergences kept building, price moving to the downside, now losing this point of control over here. That also means that the value area low becomes a very interesting target. And where is that value area low? It's right inside this target box, which is one of the confluences in this area indeed. Now, if we look at this wick, we could have also a swing failure pattern on the higher time frame, which can lead to also much lower prices. You have high 1, high 2, right? And you swing failure pattern, these highs, close below, move to the downside, but now we have liquidity down here, the double bottom at 35.5k, and do not forget all the liquidity of all the lows that we have over here, which is of course very, very interesting indeed. And we also have that weekly gap shown in a previous video, where the gap starts at this low over here, 34k. That is where the weekly gap starts. If I quickly show this once more, you can see a push to the upside on the weekly time frame. This is now your weekly gap. The high of the gap can act as support, at least most commonly. It will at least give you a reaction. The moment you close candles inside is the moment probabilities increase to move to the downside to 30.3k, which of course means quite a move to the downside from where we are at the moment. If we look at these CVD divergences, then we had continuously bearish CVD divergences building over here with the moves to the upside. We had bullish CVD as well, but it got countered each time. Price invalidating the bullish CVDs and the bearish CVD divergences have played out, continuously seeing weakness also more locally here on the very, very low time frames. Now price moving to the downside, taking this low, probabilities do increase for the blue target box to be reached as well. And if we then look at the probabilities of the different scenarios, then on the medium time frame, still looking for another high as the higher probability scenario, but it also really depends on the reaction we might get if price moves to the downside, because if we do get a straight line, of course the probabilities will significantly decrease. But at the moment, this high is made just below this golden target box over here, which I would like to see hit. On the lower time frame, we also over here have this structure to the downside. We were looking for a retracement to the downside, where we now took this low, one of the support areas, but we also have this blue box, which I will definitely keep an eye on for a reaction over here. And on the micro, currently neutral, we have a lot of overlap to the downside over here, right? Very long corrective structure here as well, which doesn't really fit nicely with a wave 2 and an impulse to the downside. We have quite a lot of overlap here as well, but quite simply, we want to see a sign of strength. As long as bearish CVDs continue and prices just falling with volume increasing as well over here, well, we're going to be looking for lower prices, but mainly if price does come down, I'm keeping my eyes open for this blue target box over here. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.